Welcome everyone to this survey results here on the New Zealand Franchising Outlook survey. Thank you very much. I want to start too by thanking Sally, Daniel and Brad for coming today and sharing their perspective as well. So obviously Sally from Franchize New Zealand, Brad from the Coffee Club, as you know, and Daniel Cloete from Westpac Bank. Also like to thank you all for contributing to the survey. I know many of you will have participated in the results, so thank you very much for that in advance. So today what we're going to do is go through just a tiny bit of background to begin with. We're going to talk about sentiment and trends for the 2025 years as deduced from you, franchisors, and also the service provider population as well. Thank you. And then we're going to ask Brad for his perspective on the outlook, and then Daniel from the banking point of view, and then Sally from Franchize New Zealand media point of view. And then if we get through the 100 slides quickly that I have, and everyone else, we should have some good time at the end for some questions and Q&A, but also feel free to drop something into the to the chat area. Most of you will know who we are, Franchize Consultants, New Zealand's leading franchise consultants, helping companies that are evaluating franchising and licensing, but also working on work with lots of established franchising and licensing networks in New Zealand looking to review and improve. And team of 9 in total, based in Newmarket. We'd love to see you in the office here. Feel free to make contact. Some of you will know actually that I've just come back from the US, as has Brad and as has Stuart Gurman if he's here, and Jeremy Yeoman, David Howe. A great trip to the International Franchise Association convention. There's also the World Franchise Council meeting there that Brad, Stuart and I attended as well, and Brad's obviously our chair of the Franchise Association there, leading that. And I have to say the convention was one this year of quite huge positivity and optimism compared to 2 years ago when the CEO of McDonald's literally opened the convention and said the franchising model is under threat, particularly from legislation. Today, it is a story of it's all opportunity and it's all go in the US. The difference was absolutely palpable. So it was very interesting to be there for the convention. It was in Las Vegas. I actually did a little bit of a road trip, about 2,000 miles, to get the lay of the land in a few days before the convention. And yeah, so it was really interesting to see. And at the convention in particular, get a good sense of what people are doing with technology in this new era where there's a lot of opportunity, but also a lot of potential disruption from some of the new technologies like artificial intelligence. I think you'll all know about this research, but this is research looking at franchising sentiment and outlook, and what you're seeing and what you're thinking, key challenges, key opportunities, but also this year we're looking at sort of what mega trends that you're seeing as most impactful to your business model in the years ahead. 42 franchisor responses this time, which is awesome. And again, I thank all of you here that have responded. That is fantastic. Really appreciate that. And 15 service providers. So you might remember we'll show some different views of different perspectives there as we go through the research. And your responses also contribute to 2 great causes, depending on which you chose, the Salvation Army or Women's Refuge. $10 for each response going to each of those. So thank you very much for that support. Well, let's get into the sentiment levels. We'll go through a number of slides here before we'll then go to Brad, Daniel and Sally. So just to begin with, general business conditions. So this is actually like the 44th or the 45th time that we've run the survey. You might remember when we started out, we're actually doing it quarterly. We've moved that now to annually. I wish we'd started it pre-GFC so we could see what that looked like. But anyway, we started it in 2010, but it wasn't January 2010, which is why you can't see 2010 here. It was like October, I think, in that particular year. But I suppose what you can see in terms of franchisor and service provider outlook towards general business conditions is that it is on the improve. It's actually quite positive, and I think in the scheme of things, it's almost as positive as it has been on an annual basis. Perhaps going back to 2014, it was a similar level, but it's been tough times, if we think sort of COVID and coming through to now. And to be fair, of course, this is the net difference between those that expect things to get better or worse. So some people still expect it to get worse, but 62% net expect things to actually be better in the year ahead. So there is some optimism about the environment being better, albeit we all know that it's actually off the back of what is a tough year or a tough few years. And I think most would probably expect that it's going to continue to be tough for a period of time before it actually does start to get better. The service provider perspective is very similar this year. That's in red. So franchisors is in the blue. The net 62, the service providers is a net 47. Sorry, they were actually more positive last year from looking at your perspective. We flip then to, well, how does that actually compare to other business surveys? This particular chart just lines that up against the NZEIL, the New Zealand Institute of Economic Research's survey for the same point in time, and then also the ANZ confidence survey, which has been going for most of the same period of time. And as you can see, particularly the ANZ survey, there's a very close correlation between how you feel as franchisors and businesses generally for that population. If we're thinking about the New Zealand Institute of Economic Researchers, they're always a little bit more subdued, and it's typically at a much lower level, albeit the pattern is the same. So it's just interesting to see how that sort of stacks up to general business. When we start thinking about sort of ease of finding franchisees, and we know this is often, one of the key challenges, often the number one challenge that you face, your view on that really sort of remains at a similar level to last year, sort of a net 26 positive. Expect, that it will be better than the previous 12 months. Service providers have got a slightly more optimistic view towards your position than you do in general, but it's certainly nice to see that in positive territory. And I guess when you look at where that sits compared to over time, it is actually sitting at some of the highest levels that it has been, although it's always, relative to the sort of the previous period that you're going to have in your mind when you are responding to that. Access to financing. This is in positive territory, which is good, but it remains an area of challenge, and also one that comes through in some of the challenges and open areas of responses as well. You can see it has improved from a net 0 last year to a positive, net 19% this year. Service providers' views come back a little bit, but they're basically at the same level. So positive overall, but clearly if it's sort of a net positive 20, there's going to be plenty in there that sort of disagree and plenty of neutrals as well. But on balance, it is in that positive territory in terms of sentiment. Availability of suitable locations. This is actually quite interesting, I think, when you think about it, because certainly, our office is here in Newmarket, and when you think about available locations, I think the whole street is available right now. It is absolutely devastating to look down Broadway and just see for lease absolutely everywhere. But I mean, what this is referring to here is availability of suitable locations, and factoring into your views here clearly are things like, on suitable terms, not just, where it's at. And it is positive, and it's sort of in its more positive territory than it has been. Clearly, sort of post GFC, it was really positive, because that was also an area, I think, where tenancies were gutted. So we're a positive 20% there. Service providers a little bit more optimistic. Finding suitable staff, this has improved for sure. It was net 21% this year and net 24%, so it is in positive territory, which is good. And to be fair, it is sort of more positive than it really has been as well throughout the history of the research that we have done. So I guess in some ways that might be surprising, because we do have unemployment, but it's not super high. But people in general, perhaps being able to, thinking that they can find the resourcing that they need for their operations. Then we move into these sort of three franchisee sort of specific performance related areas of sentiments that you report on as a franchisor. Do you expect franchisee sales levels to begin with to get sort of better or be the same or worse in the 12 months ahead? And it really is fantastic to see that is at the highest that we have had. That doesn't mean that the sales levels are going to be at the highest, but in terms of the sentiment that they're going to get better than they were sort of 12 months ago is high. So that is really good to see. Service providers not quite as positive, but still positive as well. But that is a real sort of boost up, and I think you'll see that in some of the comments shortly as well. Of course, sort of the next area that we look at is a bit more depressing, which is thinking about, well, what about franchisee sort of operating expenses? And that just continues to be another area that is, or an area that is really tough. And I know that one that that you'll all be worried about. It's one thing trying to keep pricing with inflation, and you may well not be able to, but boy, it does always seem to be the case that your suppliers can, and so it's an area clearly of continued concern for franchisors, and you can see sort of service providers with similar level of sentiment there. So we're sort of a net 48 expect effectively it to be sort of worse in the year ahead. But then when you level, you look at sort of expectations for sales and then operating expenses, and then, well, what about how that flows down through to franchisee profitability levels? And the sentiment is, on balance, sort of positive there. So you got that positive 12%. So it's good to see it in that territory there, although we know, things are going to differ by sector, and also within certain companies within sector in terms of the views there. And again, you'll see that in some of the sort of the open sentiment about how things are looking for some businesses. When you think about your own growth prospects as a franchisor, quite positive there, so a net 50%. And if we look back through the previous sort of 14 years or so, that is about as positive as it has been. So it is nice to see that returning to nice sort of positive levels, if you like. And service providers still very positive for your situation as well. So again, they're reporting on, well, how do they think things are looking for franchisors generally in terms of their growth prospects. Of course, what you think about your own growth prospects as a franchisor is most important, but it's good to see service providers view at a similar level for you as you do for you as well. So that's a run through, I guess, the sort of the sentiment ratings on those different things, so you can get a sense of, well, what are franchisors like me thinking? And we then asked, well, how are things feeling for you out there, and what is your your general sentiment? And I guess what we'd say is that it is really mixed by sector, and it's always difficult to present here. We've got sort of 42 responses. We'll try to sort of organize things a little bit by sector. FMCG, we've got a positive outlook. Retail, significant pressures due to cost of living, rising costs, some regulatory challenges, but hope for improvement in late 25. And that is a hope that is reflected in quite a few different sectors, including food and beverage, hospitality, which you'll see there. Some positivity around construction and home building, with some good indicators starting to happen there, and more optimism due to lower interest rates. Some areas automotive repairs, expecting better consumer spending in 2025. Some of those sectors have actually been doing really well, even in the tough times. Health and fitness, very positive. Tourism and accommodation, very positive, but sort of depends on the particular time of the year. You can dive into this in the full report, but it is quite interesting to see how things differ by sector. But as Daniel on the call always reminds me, that you can have a sector that's down and still have a very strong player who's flourishing. So things aren't all the same for everyone within the same sector, clearly. So what about challenges and opportunities? What do you as franchisors see as sort of the key challenge to your franchise system development in the year ahead? We had a lot of good responses, I think 39 responses here. The biggest one that a third of people mentioned was finding suitable franchisees. We know that that's always a challenge, but it's not always your top identified challenge to development. But it is this year. You see some examples of quotes there. We have less motivated buyers in our preferred target market, people wanting to only commit to purchase existing franchisees based on the last 2 years' earnings. That particular quotation goes on to say, rather than, take on a greenfield, so really an environment where people want to see sort of proven and and have less risk. And then the right people that that are both willing but also have the skill set required for growth. Hence, finding suitable franchisees, not just franchisees. Then economic and inflationary pressures are sort of the second bundle of themes, if you like, or the theme. There are things like the cost of doing business and thinking about supply costs, and then just the general state of the economy, the recession, and the cost of doing business. So that was quite predominant there. And then access to finance and borrowing costs. So you can see some of the quotations there: access to finance for new startup franchises, cost of borrowing and government regulation. Having no banks funding startups does not help either. And as you'd see in the previous slide, one sector saying, actually concerned that the bank isn't lending to our sector as much anymore. So that might be something that we talk about a little bit later on. And then when you think about other challenges, finding suitable sites, just the level of customer demand and also price sensitivity. I know, from a lot of our clients talking about, they've never had customers seeking as many alternative quotes as they are currently at the moment, things like that. Also just, unit level survival for some of your franchisees, keeping going. Regulations, finding staff, aging franchisees, and particularly within aging franchisees, thinking about what that might mean in terms of adapting to a new world with little changes that you might be trying to introduce, and then change itself, recognizing your own need for change, or in some cases there might be a blockbusting overseas competitor who's coming in with a whole new, you might say, dumbed down light franchise model that might seem a whole lot more appealing to to people for a particular reason that could actually change up a whole industry. But thinking about, well, how does that then compare to previous years? So finding franchisees, it's the top one. As you can see, it hasn't been the top identified challenge the last few years. So last year it was finance. This year finance is number 3. This year the economy, as you know, is number 2, or economic factors, then finance. So things have changed about over the previous years. As you can see, 2022 was all about COVID-19 and finding staff and the ability to open. Okay. But let's move to more positive things and talk about, cited opportunities for development. And again, sort of 39 responses there. And I know this was sort of identified as a top challenge, but it's also identified as the top opportunity for development in the year ahead. So, many systems actually quite positive about the outlook for franchise recruitment and expansion there. by way of example, great territories available and more candidates looking due to changes in corporate employment. Prospective franchisees looking to capitalise on low interest rates with business loans, and new people looking for new opportunities in business. And I'm sure we all know some people that may have been restructured that are looking for different opportunities and aren't expecting that they're going to find employment per se. So recognizing that actually they do need some form of a business, and hey, what's this franchising thing, and can you must know a good one, they say. So I imagine that we all know someone who is in that difficult position. Economic recovery and lower interest rates, there definitely is the case. It is quite a theme here that people are expecting the economy to improve and it to feel better, certainly in the later half of this year, albeit I don't think anyone's expecting a sort of an absolute V-shaped rebound. It's probably going to be more, as the economist said during the GFC, it might be more sort of shaped like a bath. It's going to be painful, and then you slowly ease out of it. Who knows? But let's hope that it's a bit faster than that. Other opportunities, operational improvements and cost reductions, and often through technology itself, AI and technology. So a proportion of people are citing opportunities there. AI to improve process and systems to help drive efficiencies, to help reduce cost and increase output. AI will make it easier to fine-tune marketing to find our target audience. Interestingly, in the US at the convention, that was certainly one of the big use cases of AI, was around customer segmentation and target marketing, and that franchising companies were talking about, including small to medium size franchise networks as well as some of the big ones. Improved use of data and technology to help communicate to the customer, market to the customer, and use data to make the best decisions. And then consolidation and multi-unit growth. There were a few references to franchise companies being quite confident about attracting independents that are out there that actually recognise now and see the need to actually join a strong franchise network rather than continue to try and operate as an independent, which is great to see, and good for New Zealand franchising. In terms of megatrends, we asked you franchisors, what you see as sort of the key megatrends impacting upon your business models in the next 5 to 10 years. We presented a number of concepts to you, which you ticked if you thought that this impacted you. So it included the economic pressures, consumer behaviour shifts. Sorry, let me just let someone in. Yep. Demographic shifts, workforce challenges, digital transformation, like AI automation and online ordering systems driving operational efficiency, and also data insights. Climate change, marketing evolution, regulatory compliance, supply chain resilience, and franchise model adaptation. Will you be surprised or not to know, probably not, that this year digital transformation was definitely highlighted as number one. So 87%, and all franchisors responded to this question, all 42. So 87% of you highlighted digital transformation as one of those key megatrends impacting, your future franchising business. So that stood out as number one. The second one was economic pressures, perhaps not surprisingly, but we know that is turbulent times, 73%, and then workforce challenges like labour shortages, rising wages, and evolving work models. And that is an interesting one. I heard less about it at this convention in the US than I did 2 years ago, when they were really talking about, the new labour force and expectations around working hours and patterns and what future business ownership might look like and how franchise models might need to adapt to that. But perhaps you are feeling and seeing that, or that kind of might be more related to staffing. It'll be something that would be really good to delve into, I think. Demographic shifts, almost half. Supply chain resilience, 33%. Regulatory compliance, 27%. Climate change, 20%. Marketing evolution, 13%, although some of that, I think, to be fair, is going to be related to the digital transformation. and then franchise model adaptation, that final piece. So this is something that we'd really like to delve into further with you to sort of flesh some of these mega trends out a bit more. Clearly, there are some really impactful areas out there in the environment impacting your business, and we do need to take them seriously and think about actually what is the opportunity, what is the threat, what is practical that we can do to help best position our franchising companies for the future. Look, that's probably about enough from me just to begin with. The full report has got the summary in it, so I'll just sneak past that for now, and we'll make that available to you after this session. Let's hear from Brad, Daniel, and Sally. We might start with Brad, if that's okay. I suppose just to ask you to begin with for each of you, but let's start with Brad first. I suppose what are you thinking? What resonates with you from what we've been through and other franchisors are suggesting, and what are you seeing, Brad?
Gosh, the first one I'd say is that graph comparing our survey to the ANZ survey and the NZIER survey. Probably quite surprised to see how normal franchisors are, that we actually think like the rest of the country. That one stood out. So, yeah, look, I agree with a lot of the data. I certainly feel like, in general, people are trying to be more positive and talking more positively, thinking more positively. But the reality for us is that, you know, it hasn't translated immediately to some massive improvement in sales just yet. So I think the general population is trying to feel more positive, but hasn't actually got the money in their pocket just yet. They're looking forward to their mortgage coming down, or they're looking forward to inflation settling, or it has settled, and, you know, the cost of living coming under control a bit. But it isn't actually money in their pocket just yet, so they haven't actually rushed out and started spending. We've had we run a calendar financial year, so we're a month and a half into our new year. We've had an okay start to the year. We sort of bounce around a week or two positive, like for like sales up on last year, a week or two slightly down on last year, but certainly nothing really significant. So we just had our franchisee awards 2 nights ago, 220 odd people down on the waterfront, and I think the mood in the room was certainly better than this time last year. Franchisees are definitely feeling a bit more positive and excited about the year, and probably similar to my comment before, they're trying to feel positive. They want to feel positive. Everyone's a bit sick of being negative, but the reality is they are still under a bit of pressure, no doubt about it. For us, I think the challenge, coming this year is going to continue to be some cost of goods issues. Coffee, milk, chocolate, some of those big things for us are certainly not doing us any favors. Anyone who's sort of reading the media has probably seen some interesting stories about coffee recently, and the $6 flat white, and whether that's realistic or not, I can't say. But certainly it's going to, I think, continue to be a bit of a challenging year from a supply and cost point of view. There's only so much we can continue to pass on to customers, I guess, at the end of the day. We will have a menu price increase at some point in the year, probably around mid-year is when we normally do it, May, June. But it probably won't be in line with as quick as some of our costs have increased. Fortunately, at least with inflation coming down, many of our rental increases are tied into inflation, so that has helped a little bit there. But of course, after 2 or 3 years of really large rent increases, just because you now only get a smaller increase doesn't mean you actually reduce your rent. It just means it stops going up quite as fast. So there's still some pressure there with rents, no doubt about it. What else? In terms of franchise inquiry, no massive change for me just yet. I manage all the franchise inquiry in our system. Maybe a slight improvement, but it's certainly not I haven't seen any great rush back. Nothing really substantial. There are definitely some people starting to look at buying businesses, but not at any kind of huge rate. And in terms of new store development, I think again, for similar to last year, this year there's going to be very few major retail developments. None of the sort of big landlords are talking about extensions or new malls or any of those kind of things really at this point in time. There's a couple of small ones regionally, but I don't think we'll see any major new retail developments in the next year or so. So the growth opportunities for us really needs to be, probably outside of Auckland and more of the regional areas. What else? The megatrends, those top three megatrends: digital, economic, and workforce. I wasn't too surprised to see any of those. I guess I think I spoke about it this time last year. We've done quite a lot of work in the coffee club in our digital area, both for back of house and for customer facing. And I think that'll just continue. It's something that's never finished, unfortunately. It's significant investment in terms of cost and time. You've just got to keep chipping away at it and making sure that you've got what you need to have for both your own management as well as serving and looking after customers. The economic challenges or economic concerns, yep, I don't think that's any great surprise. And certainly, we're not expecting to see any major relief in the next few months. Perhaps it's the second half of the year, but we're not expecting anything to suddenly flip on its head overnight and for us to be in a perfect world. Workforce, that one probably isn't a big concern for us anymore. If we go back, say, 2 years ago or whatever it was, when those borders were tightly locked, that was a massive issue for our group, for our franchisees. And every time I walked into one of our cafes, I would have a franchisee say to me, I just don't know what to do. I don't know how I'm going to open my doors tomorrow. I'm working open to close 7 days a week. I put an ad on Seek. I don't get a single application. I can't keep doing this. I haven't heard that for a long time. And, from what I see, our stores are well staffed and ready to go. So workforce doesn't seem to be such a big issue for our group. So, yeah.
Brilliant. Well, thank you very much, Brad. I'm sure everyone would appreciate what Brad has shared there, and for just going so methodically through all those different areas too. Thank you, Brad. Much appreciated. No. That was brilliant. I'm sure everyone would agree. That was excellent. Thank you. Daniel, can we ask you to come in now and offer your point of view, I guess, on what you've seen, but also thinking sort of specifically around the financing area and banking area as well?
Yes, certainly, Callum. So, thanks for all the great insights from both of you, and it's really good to catch up with everybody. I also like to welcome Rachel King, which is our business manager in Dunedin, on the call, her first call of this nature. She's doing the franchise deals in Dunedin with Graham Wiley, which a lot of you will know as well. So the first question is probably how are franchisees going, our customers? And I would say a lot of industries has bounced back nicely after COVID, and they've been able to get their sales and profitability back, but some are definitely still struggling to return to profitability, probably due to a combination of margin pressure and sales, like some of the things that Brad just mentioned. Some systems have been tweaking their business model quite extensively to support the franchisees' profitability, which is good. And I understand from some of the people that went to the overseas conferences that that's quite a focus in all of those countries as well. So that's good to hear. Another big issue that we're picking up is tax arrears, which is sort of historic through COVID. And it's a much bigger issue than most franchisors seem to realize. It's creating some really big issues. So would suggest that franchisors or ops managers maybe check on that when they talk to the franchisees. So regarding economic trends, which is, second most concerning, our chief economist did a presentation on Tuesday, and he was very optimistic. Actually, some people say he even smiled. So, that's but. So we've, some of the big financial headwinds we've been sort of working as easing a little bit, and these higher commodity prices, that will be a boost of income in the rural areas, given that, that is a big contributor to the economy. That makes a big difference on disposable income. And there's probably a few challenges regarding increasingly rocky global outlook, but we won't be talking about that. I think really for us, we do see 25 will probably see New Zealand economy turning a corner a bit. And so then obviously we've got the rate cuts coming through, which was announced yesterday. So we think economic growth will go to 2.5 in 25 and maybe 3 in 26. And then the rate cut yesterday, 50 points with another 25, maybe in April and maybe May again. That depends on a few things, but it's a nice trend. The interesting thing is that most people are fixed for shorter periods at the moment. So the cycle will be a lot shorter than, going into the higher rates. That would put a lot of disposable income back into the economy to that point that Brad made in the beginning. I won't talk about inflation and the rest of the stuff now. On unemployment, they think unemployment will rise to about 5.4 in the mid-year. So, that's to do with availability. And the New Zealand dollar probably dropped to 54 US cents. So, that'll all have influence. But, 24 was definitely a rough year for our customers. But we are seeing, a lot of positives. Household spending is growing again already. We can see that in the numbers, strengthening tourism, and the house prices stabilized. Not going to comment on tariffs and trade wars because that's not outside of the scope. But on franchise funding inquiries, I have to say, business confidence is high according to all the surveys, like we said, but they still really need to convert into actual growth and investment. So in that respect, I do also agree with Brad there. So it's the same with the investment side. I would say the good news is that our franchise funding inquiries has picked up a lot in the last month. That's probably a really good sign. People are actually seriously considering things. We have funded a number of significant franchise purchases recently, and some were really profitable. So the issues the banks have at the moment, I would say, is around cash flow funding. That's as opposed to secured lending, is that the profitability is profitability really. And it's very difficult for the banks to fund against businesses that's not making money or even losing money. And that restricts your options quite a bit to assist people into business. So I would say in summary, there are profitability issues in some industries, but there's no problem with appetite. And I think that would be true of most banks. I don't know if they all would run specific franchise policies. They would definitely have appetite for business funding. And we're definitely looking forward to a serious uptick in economic activity later in this year. And just to end on another positive note, I see all the business rates has just dropped by 60 basis points today. So it's always a good thing when that happens. So.
Yep, no, brilliant. Thank you, Daniel. Thank you for sharing there. And I guess a message for retailers and other franchising companies and industries here is to be fully staffed come June. What date, Daniel? When a whole lot of...
Don't hold me to any of that.
Yeah, that's right. Yep. No, well done. Thank you very much, Daniel, for being so open, sharing as well. Now move to Sally Knight from Franchise New Zealand. Sally, I guess a couple of your comments on, I suppose, what you've seen from the survey, but then perhaps delving into what you're seeing in terms of franchise marketing and recruitment inquiries and so forth. Thank you.
Well, it is good to see that general business confidence is on the up, and that's borne out by some good trends occurring in our own analytics. Certainly since about November, things have started to turn around in activity that we've been able to see, and we've got the usual kind of post-Christmas bulge as well going on, which is always good, but it needs to be sustained. And and it's I'm finding it quite interesting, Daniel, and I've heard another couple of service providers reporting that they're getting some significant interest in the last 6 weeks in particular. And I think that seems to be running ahead of some of the actual franchise inquiries, which means that people are getting themselves set up ready to buy before they're necessarily actually fully approaching franchisors and saying, like, we really want to get into exploring your opportunity. So that's a very good sign, because it means that they're going to be quality leads once they come through. We've had strong readership in some of our areas like digital magazine and the newsletter and social media over the last year. And yeah, I mean, that's just something that's kind of been tracking up for us. I'm not sure that it necessarily speaks to anything significant, but it's good for us to see growth in that, which could have been people doing some of that early exploration as well. But it was clear from the sort of responses that we saw coming through to franchisors themselves that there was a difficulty in anybody being able to commit last year, and especially in that sort of retail and hospitality area, which is interesting because when I did some stats on what particular businesses people were looking at, there's still like 36% of people looking across our site into specific industries. That's still their industry of choice or industry areas of choice that they're going to. So they're looking, but they haven't been able to necessarily commit in those areas. And for Brad and the other franchisors in that realm, I do hope that does start to turn around very soon. Yeah, I mean, in terms of network growth, the poorly performing economy just has negatively affected all of us, and franchisor budgets are obviously tight at present. I mean, we've seen the last couple of magazines have just been a little bit smaller. We tend to ride the wave by, if things are tight for you, then we have to drop a little as well in what we can provide in size of publication. But that's okay. We'll come back alongside you guys, and I am encouraging people to remember that it's important to keep ahead of the pack as buyer confidence and ability to access finance improves. Yeah.
And Sally, would you have any tips, I suppose, for franchisors in terms of recruitment marketing at the moment? Is there anything particularly topical or any sort of particular themes that you suggest should be emphasised, or strengths that a franchisor might have that they should point to in the current environment?
Well, I must say that we are about to run a cover story in the next issue, the March publication, on AI and how that is impacting people. It's been great timing with you guys going off to the convention and picking up some information there. But we're really happy to talk to anybody that's starting to see how that incorporates into their business and the challenges and the opportunities that you see it bringing you. We definitely think that's going to be impacting a number of different areas in marketing. News today out of the Herald newsroom was that, they're moving to a lot more AI to control some of the whole processes in the background. So you're going to see tightening up of the media platforms and how they actually operate, incorporating a lot more of that digital transformation in there, and that could just make things A, easier for targeting, and B, quicker perhaps to find responses and to measure with the analytics. That's my hope. I can see Google moving faster and faster along that track, which is good news for us because sometimes they were a bit clunky. Yeah.
Yep. Well,
Mm.
certainly at the thank you very much, Sally. Really appreciate your thoughts and perspective there, and good to see that there is some strong inquiry happening, and from Daniel, from your point of view, that it's there's good appetite for lending as well. But you can certainly see at the International Franchise Convention that just very strong use across a whole plethora of different marketing related areas, but the sort of the new AI and related technology developments here, I mean, it's just exponentially going up. There's a proliferation of different tools and how companies are using them at different aspects of, I suppose, the marketing process. So brilliant. Well, look, thank you very much once again, particularly, well, not particularly, to everyone who has responded to the survey and been involved in providing information such that we can actually produce the report and insights. And this was a really strong year for that. So I really thank you all for the time that you put into that. And today I really want to thank Brad, Sally and Daniel for their perspectives as well, and just giving so freely there. Like I mentioned before, we're keen to explore some of these mega trends some more, so we might be in contact soon with you on that to think about ways that we might be able to explore and share some of the ideas there as well. But listen, thank you very much, everyone, once again. Hope you found that valuable, and look forward to being in touch, and good luck for the year ahead.